Hi, everyone. It is Thursday, January 12th, 2023. Welcome to TechTO Quick Takes. I'm your host, Alex Reilly, and here are today's headlines. Radical Ventures rides AI interest to a $550 million fund. Web3 contagion hits Canada as Coinsquare backs out of a Coinsmart acquisition. We'll dive more into what that means. And Nuvei continues to grow via acquisition. And I'll welcome Alex Norman now. Hey,
Hey,
Happy New
Alex.
Year.
I don't know if we're still allowed to say that, but yeah, Happy New Year. How's your holidays?
It was very nice. Thank you. I think we're still allowed to use it for the next week. That's I think what the unwritten rule is that I've been hearing. So I think this is the last couple days we can say it.
Yeah,
But
well, you know,
holidays were nice. How about yours?
good. I got new digs as you can see. Yeah,
Those virtual
virtual.
backgrounds are
Yeah,
looking very
yeah.
realistic.
That's why I spent the holidays looking for new virtual background and playing with generative AI. And I'm instead of saying Happy New Year, I'm saying to lots of my founders that hopefully 2022 is the toughest year you'll experience, and that 2023 will bring more good news.
Absolutely. It's all up from here. Lots of good things for 2023, I'm sure. And I'm sure lots of founders are excited for what this year's going to bring. Uh, Lots to talk about. I know this is our first episode back in a while. I don't think we did an episode since November, but just to dive into a couple headlines to kick things off. Radical Ventures. I do want to discuss sort of
Yeah.
what's going on there and that. So we have talked about them before. But what's the news? Maybe we just start
Yeah,
with
and just some context. I focus on stuff that has happened over the last week because we could go a
yeah,
lot more news, but try to keep this timely. Look,
yep.
Radical, according to the New York Times and BetaKit, they've reported that Radical is raising a new fund of 550 million USD. Uh,
Mhm.
the fund's been announced. Sounds like they've done a first close, which means they've actually got capital committed and the ability to call capital invest. But the entire 550 million has not been committed or raised yet. So sounds like they're aiming big. They've got capital committed, and the AI theme is rolling.
Yeah, and as I mentioned, we've talked about Radical before on the show, but so Toronto-based VC, as most people are familiar. But is there anything else that folks should know about Radical
Well,
and just who they are?
so I think Radical is an interesting venture fund. It
Mhm.
didn't emerge like other ones. This was the GPs has historically been operators, and their last company got bought by TD, and then they, everyone thought they'd be there for a while or go start another startup, and they, came out of TD with TD's backing as an LP, saying, "Hey, we're going to do this Radical Ventures. We're going to focus on AI." And the reason we're the team to do it is, Canada in general, but Toronto in particular has a strong AI leading, PhDs and as scientists. One of the GPs was involved with the Vector Institute, which is one of the big AI leading AI technology hubs, sort of where you can get talent. And they said, we're going to invest in the early days, North America wide. We're going to do early stage seed fund. And they've quickly grown to be a leading sector, I guess, thesis driven fund globally. So, if you look at the progression, the first one was a seed fund, then they raised a large institutional fund, then they raised an opportunity fund. And so they went from investing only in seed to saying, hey, an institution will invest in A, and an opportunity to go later than that. And they've gone from being focused North America to now doing investments, in other countries. But they're actually also flexing the Canadian homegrown talent. They've done quite a few investments. Some I saw, if you look at their website, is Pocket Health, Sensible, Synex, Wabi, and Xanadu. If you look at least three of those are obvious AI plays or AI enabled.
Mhm.
Xanadu's quantum, but strong thesis focus, growing their fund, AUM's growing quickly. They're competing globally.
So strong thesis focus, obviously competing. I think the inventory for ventures can be a bit overwhelming. So why is Radical unique, and what are they, I guess, bringing that's unique for the ecosystem in Canada?
Well, I think a couple things. One is they are theme based. They're a large fund. Like if you look at our funds, most of them are smaller. You've got
Hmm.
Inovia and you've got Georgian who have bigger funds, but that's really it. Maybe Omer's is in the same size. Then you look at where they're investing. They're investing in AI. They're an AI driven thesis, so they're not generalist, which is also unique in Canada. And they are competing for investments everywhere. And what's interesting is they're very bold in investing in high potential founders and ideas, giving relatively early stage unproven companies, large valuations. Like if when you look at what they invest in Cohere,
Mhm.
company that's doing really cool AI technology, but high valuation, not much in proven product market fit yet, and which is I think a bit different than lots of players in this ecosystem.
Right. Okay. That's good to know. And why, just back to the fund, so why were they able to raise? What's the reasoning behind that as well?
Look, so it's not, in this environment, it's not easy to ease as a founder of a company or a fund,
Hmm.
and you have a due diligence process, and to continue increasing the fund size, you have had to prove three things, and the three things which any LP is going to look at. And what it's interesting, they have a lot of returning LPs, so lots of people are happy with what they've done. And my assumption is they're going to have lots of new LPs, which are saying, okay, we like what you've done, we're willing to invest in you. It's first the who's running, who are the partners making investment, why do we believe they can get good deals, why can we believe they can invest in the right deals at the right price. So the team here has a lot of strength and connectivity in AI, so it's credible that their positioning makes sense with their background. Their current portfolio has what I call several high-profile companies, Xanadu, Cohere, Wabi. Hey, so they're saying we can get into these high-profile companies. We have like these companies that are getting great returns, and look, timing is great here for them. AI sort of, you sort of had AI be hot just before they founded the first fund, and maybe it was even a bit cooler when they started the first fund. But now AI is extremely hot. They're actually ahead of the game with generative AI. So people again are saying, "Oh yeah, we need more AI exposure. Where's the fund focused on AI?" So that helps as well.
And to just maybe tie a bow around all of this, what are your takeaways from this news, and for any founders listening?
Well, I'd say be bold and aggressive. Radical
Mhm.
is in a way very un-Canadian, quote unquote. As they have scaled the size of their fund really rapidly, they compete globally, and they're willing to make bold, large investments and worry about the outcome and not the downside. I think both Canadian investors and founders should learn from this. When you're building something, shoot for the stars. Be aggressive, compete globally. Don't try to go for local maxima. Second thing, if you're an AI enabled company or an AI company and looking to raise an A round, you have to go talk to Radical. If they're just closing a fund, they're not gonna be rushing to invest in this environment, but they have capital to invest. LP's just committed, so it's pretty confident the money's there. So that you need to talk to them. And then I think the other thing, which is a bit counterintuitive and not obvious here, is um, the positioning in the long run for this fund. Why is Radical in the right place right now? Is because they made this investment years ago, and uh, the GPs have been in AI since before AI was cool. And I think it's a bit different what you see. A lot of the ecosystem founders and employees, they chase trends. Let's go to Web3. Oh, now let's start something in climate tech. Let's join a company. And as something becomes hot, the timing feels right because it's easier to get money. There's more excitement. Everyone's talking about it. But it's usually much harder to join something when it's become hot, and much more beneficial to find something you're excited about, or technology you're excited about, and go there before it becomes cool. Because when it becomes hot, you'll have a
Right.
competitive advantage. You'll have the network, you'll have the knowledge, you'll know what works and what doesn't work. I'm not saying like, look, Web3, maybe you could have gone in 2010, was maybe too early, and you don't want to be too early. But joining Web3 in the end of 2021 was probably the worst time to go after it. So I think it's just a reminder not to chase the hot trend, but to
Right.
find something you want to build.
I was just going to say, because as we've talked about before, timing is everything, but it's hard to obviously gauge when the best time to get involved is, because you do obviously want to stand out, but at the same time, you don't want to introduce something that customers or just the market's not prepared for. So it's a very good perspective. And I think a lot of people can learn from that. Before we jump into our next headline, I do want to touch on just the cool work we've been doing with the TechTO newsletter. And if you haven't yet subscribed to the newsletter, you can do so on our website at techto.org/newsletter. We have completely revamped a lot of the look and a lot of the content that we're sharing. So, a lot more focus on the founder perspective, the founder story, and really highlighting, as you said, kind of like those deep hits on what it is people would probably be most interested in. Is there something recently since the new year? Let's just start there. That's you've been enjoying, Alex, that's really stood out
Well,
to you.
so I think one thing we've heard from the communities, they want to know about the companies they should know about before they're well known. This goes back to finding something interesting. So we've been spending a lot of time doing research and getting profiles of up and coming companies.
Mm-hmm.
And we're especially important right now where the news cycle has gone negative, focus on lots of bigger companies having trouble. There's still a lot of interesting companies from coast to coast building really cool stuff. So we're spending a lot of time finding those founders and working on interviewing them, and so you can get a good profile of who they are and what they're building. So I just think the profiles we've done are just taking a step up. And look, if you think there's a company we should be profiling, feel free to email me at alex@techtoronto.org or techto.org.
Yep.
And because we're always looking to cover companies from coast to coast and help people know what the great companies are in Canada.
Absolutely. I will also link how you can subscribe and how you can read past issues, and also the reach out. If you do have any ideas for us, please. We've been calling on the community a lot for this, and I think we've gotten just a fantastic response. And definitely companies a lot of people I don't think have heard of quite yet, or not really reached the level of awareness they should have yet. So absolutely. I think that's great. So now on to Web3, which we've talked about a ton, especially in the newsletter recently. Coinsquare backing out of the CoinSmart acquisition. I'm sure you have seen this quite a bit, just given your background. But how usual is this for those that may not see this all the time or were not aware? But how usual is it to see an announcement of an acquisition fall apart, essentially?
Yeah, well, first of all, I haven't seen many companies with similar names like Coin. Two coins in one company. I thought that was interesting.
Yeah.
Look, I think you have to break it down to two type of announcements. One, when there's there's public announcements. One is when there's a public company involved. Either it doesn't have to be both; it just has to be one. The announcements usually happen after there's an agreement to merge or acquire a company. What happens is they then announce it, and they have to announce it because they have to let shareholders get information, and they say announce a date in the future where shareholders can vote on approving this acquisition or deal. And in that case, it doesn't happen often, but it's not rare that an acquisition doesn't happen. Maybe you have an activist shareholder that campaigns against it. There could be material news. It could be another bidder that comes in. But for deals involving a public company, the announcement happens before the deal's approved by shareholders. So it's not outside the realm of possibility the deal falls apart. And I don't have the stats. I'm sure it's not 1%, but it's somewhere around there, but it does happen. What is more rare is when there's two privately held companies. Mm-hmm. When a deal is announced, at that point, I'd assume shareholders have approved a deal, and it's just either you're waiting for regulatory approval or maybe some legal work. But the deals feel like two private companies should not have a deal fall apart.
I completely agree. And you might not have an answer for this, but I guess why did it fall apart? What actually ended up happening?
Okay. And again, first caveat, this is pure speculation because, what's interesting is the company that was getting acquired put a press release out to tell the world that the company acquiring them, so that Coinsquare is backing out of the deal. So it wasn't, and they didn't give much details. They said, in that press release, Coinsmart said they were even unaware this was going to happen. So this is pure speculation. First of all, give it a context. These are two Web3 companies. They focus on their exchanges for public to Canadians to buy and sell crypto assets. And, we talked a lot about this in last year where given the market size, there seemed to be a very fragmented market that there should be probably consolidation in the Canadian crypto exchange market. So the announcement wasn't shocking and was a trend we saw last year. What's happened? This deal was announced 4 months ago. What's happened since then? Two things. The volume of transactions in the Web3 market has continued to shrink. There's been a couple of scandals where there's been contagion. So my guess is that there's, again, it could be many different reasons, but, you do a deal like this to get, economies of scale. You go 1 + 1 = 2 in revenue. We can take half the cost out. We can just support one exchange. We can don't need all the people. And that, maybe as the market has shrunk, the economies still aren't there. Maybe one of these companies has a lot less market share than they had 4 months ago. So, they didn't want to make sense. Maybe there's cash flow problems and this doesn't help economics. So it could be purely economic. It could have been one of the companies was exposed to the contagion somehow. They had some assets locked up at FTX. Doesn't seem to make sense to me, but that could be possible. There could be another security breach, which causes lots of legal liability. My guess is there's something legal or economic behind this, and it's very unusual. And I think it also says probably that neither company's in the best position,
Right.
to consummate a deal that doesn't have immediate impact on the bottom
Right.
line.
And as you said, no definitive answer, all speculation. It could be a multitude of things. High level, my perspective, not a great thing
No.
for either company, but what does it mean for both of them that were involved?
Well, again, I'm going to say more about what this means for Coinsmart versus Coinsquare,
Sure.
because you're a company that's about acquired. You've publicly announced it.
Yep.
Well, hypothetically, you don't take moves that will. You shouldn't be taking moves that impair your company till the deal's closed. You start acting like the deal's closed. You stop worrying about planning. You stop maybe making hires. Depending on what you're being bought for, you take different actions. You stop doing marketing. Like you don't think about the future, and you take your foot off the gas pedal. So to have a deal like this, and then 4 months later say, "Hey, you know what? This deal's not happening," and you're going to be an independent company, that leaves something that's probably been could have had a good direction before is a bit more rudderless right now, and you have to scramble to sort of go back to the gym and build the muscles to run a successful company. So I think it probably impairs Coinsmart from a strategic perspective.
Yeah. And I mean, just anyone that's listening that's potentially entering even the mindset or thought around acquisition, what is, just in your opinion, some of the biggest mistakes or lessons that people could take away from this and potentially learn for their own
So
benefit and education?
the first thing I'll say is this deals with any transaction. So an
Yep.
acquisition, funding, a new employee starting, until the transaction's completed. Don't
Signed, sealed,
not,
delivered.
not even signed till it's
Not even.
delivered, right? Signed and delivered, as I guess you're going with, right? Like
Okay.
like I've seen, in the last in my career, and actually in the last 6 months, I've seen this. I've seen funding deals get signed and passed IC, and cash doesn't show up. I've been at companies where they hire employees and employees don't show up for the first day. They change their mind over the last weekend. They go back to the old employer. So the human nature is we work so hard to get this deal signed. It's now needs to be, it's more or less done, and we sort of relax. And I'm not saying be nervous and paranoid till something happens, but a deal's not done until it's like you said, it's delivered. So that's the first thing.
Okay.
I think then going to a more specific thing with the Canadian crypto exchange market, look, we've always said it's highly fragmented, way too fragmented for the size of the market. There's incredible headwinds right now in the market. I think we're going to see worse actions before it gets better. And so if you're looking at, if you're someone that's making money off volumes from crypto transactions, you better be double checking your cash flow and your projections, and have a bear case, and even worse bear case. I think the thing is not to overgeneralize the entire Web3 ecosystem, because I think crypto I feel like lots of those trade platforms and exchanges had a lot to deal with sort of like Web2 approach to Web3, and I think there's a lot of great Web3 things being built, but I do think it's in the middle of a bear market, and it's not going to get better.
Okay. Signed, sealed, delivered.
Yes.
Big takeaways. And I feel like we've said that a lot too. It's going to get worse before it's going to get better. Hopefully getting better.
But as they say, this shall pass.
This just too shall pass. Exactly. Yeah. Okay. That's great takeaways. Thank you. Because definitely, I think a lot of people had some questions around that headline. So that was great. Lastly, one more topic I'd love to discuss with you is the Nuvei news and just how they're continuing to grow rapidly via some acquisition. So let's just start with who they are. Who's Nuvei?
Yeah, so it's funny. If I were to describe Nuvei, it's one of those companies, again, that doesn't have a high profile, even though they should. At least in my opinion, they don't have a high profile in the ecosystem. So instead of me trying to describe it well, I went to this source called Wikipedia and took their description.
Why do you think that is? Why do you think they don't have a high profile yet?
Look, maybe I'll describe what they do, and we can discuss, I think, why that doesn't lead. So
Sure.
they're a global payments technology. They're based in Montreal. They provide, what does that mean? They provide a business with pay and payout options, including card issuing, banking, risk, and fraud management services, enable them to accept more than 570 alternative payment methods. So why do I think they're not, they're not talked about as the same terms as, like other public companies like Thinkific or Shopify? I think lots of people look at global, historically, other than Stripe and maybe Square, global payments technologies feel like an old technology that's been around forever. That's one of the first things that got, digitized with your credit card, your debit card. So and it's a massive, it's a $1 trillion industry. So to be, it's
Right.
very hard to be a known market leader. So you got an industry that looks like it's old technology. Their customers are not, other tech companies. They don't get crazy multiples. So I think this is part of the tech industry where people just get their heads down and just focus on execution, because it's just not one of those areas that are cutting edge, but they constantly have to reinvent themselves. They have to constantly execute. It's a very tough place to be a winner, and Nuvei's trying to be a winner.
And so they did go public on the TSX. Is there anything else important just around them that you'd want to share and
Yeah.
about the
So
awareness?
again, just to show how underrated they are, when they went public in 2020, they were the biggest tech debut in the history of TSX. So that they were kind
Yep.
of the retail and professional investors that look at stocks loved to invest in them. And then historically, they've used acquisitions to grow their top and bottom line. So they're not just, they consolidate the industry.
And the deal specifically, why is that interesting?
So they acquired Paya Holdings, an American competitor that focuses on
Mhm.
different sectors, like their customers are in healthcare, education, nonprofit, and utilities. So this bolts on growth, diversifies who their customer base is,
Yep.
and they paid all cash. They used debt to get cash, and they paid cash. And this is different than what we've seen most. We have quite a few companies consolidating their industries in Canada. Like, you've seen Lightspeed acquire a bunch of companies. What we've seen over the last few years is that they use shares versus cash. So the fact that this deal is cash either indicates Pi did not want shares, or Nuvei thinks their shares are underpriced in the current market.
And just takeaways or anything final that you would think would be interesting for our
Well,
community.
I'd go back to I I'd go back to what I just said.
Mhm.
So yeah, uh, you look at the last thing we talked about, a merger falling apart. And one thing you've been hearing in the last 6 months is that lots of companies that can't get funding will see mergers or acquisitions to get them an exit. I think this current market has a couple headwinds to acquisitions that aren't normal when the market slows down. First is the largest tech companies are under more scrutiny than ever from an anti-monopoly regulator.
Mhm.
So the big acquirers, you think of just people think, oh, that's Google, Meta, Apple, but even Adobe's facing some pressure with their acquisition of Figma. And so for a lot of larger publicly traded companies, they have to be sure that the potential regulatory scrutiny is worth the burden of acquiring, or worth the upside of acquiring someone. The second is the value of acquired stocks have fallen, which means the the acquisitions could be potentially more expensive if you're paying cash or with a lower valued share. That for it to be acquisitive is a higher burden than expected.
Mhm.
So I think it's going to create an interesting opportunity for companies like Nuvei that are not, Adobe, and are not Microsoft at this point. They can be bold and make large acquisitions, because there's going to be, I think, less players than people expect out there. And I think the flip side, if you're working at a company and you're hoping for an acquisition to basically save your business, it might still happen, but it's probably a much lower valuation than you're expecting. And
Right.
so I think part of the things getting worse, which again, I'm generally an optimist, and I think things are going to get better. But I
Yep.
think part of the
You do
unexpected,
always follow up and say it's going to get better.
yeah,
Yeah.
I think part of the unexpected pain over the next 6 months might be deals that get consummated or don't get consummated, but at lower valuations than people would expect.
Right. And just to maybe quickly circle back to what I was talking about with you before about just why maybe they didn't have the awareness. Obviously, acquisition helps with that and the growth will help. Is there anything else they should be considering just around trying to stand out more in this type of industry? As you said, it's quite large and there's lots of other companies doing similar things.
So the question is, how can
Like what
someone
else
like
can they be doing?
to stand out as
Yeah,
as a potential, just as a company, or to be acquired?
as a company.
Look, why do you need to stand out, right? Like my belief is,
Why shouldn't you stand out?
well, so I think companies, just let's call good mind share helps you with two things, and they're
Okay.
very important to help you get employees, because employees like, this is a cool company, I want to go work for it,
Mm-hmm.
or it helps you get customers. And it could either help you more awareness to get small business customers, or it could help you and large enterprise feel comfortable working with you. I think the other way to, but so there's a couple ways to stand out to that. One is just to make sure that you have a content marketing strategy that gets you a lot of attention.
Mm-hmm.
Like Shopify, we looked at, if you looked at our, the written quick takes, the first one back from the holidays, was Shopify had 3 quick successive announcements about new products, about new strategies of employees, quick, cool things they're doing that are a bit unique. You get press around that. You see Shopify in the paper and on Twitter for like 2 weeks, like everyone's talking about them. That creates buzz.
And it makes employees excited too.
Yeah. It makes employees. That's marketing to employees as well, right? Hey, we're not going to have meetings. Yay! I think God, I don't think anyone wants meetings. And I think the second way, which is a harder one, but it's a more sustainable one, is just out execute everyone. Like, if you build a great company and if you know how to acquire companies and integrate them well, eventually people will pick it up no matter what your industry is. Over the years, like waste management companies became darlings of the media press. Dental companies, right? So like, I think consistent execution and growth also is a way to stand out over a long run. And to be honest, I don't think you need to be known by everyone. You need to be known by the potential employees and potential customers. So just because I don't know about the tech industry doesn't talk about something doesn't mean the rest of the ecosystem's not, or the rest of the economy is not.
Right. I think that's a common misconception too, right? Is you probably think you just need to be the number one most talked about, I guess, title in your business. But as you alluded to, you don't. It's not necessarily about standing out in that capacity.
Yeah.
Cool. Thanks. Just before I let you go, and before we sort of finish off our first episode back, 2023, we have some amazing events that are coming up. One actually coming up very soon on January 16th at 1:11. We've got Rebecca from Dealmaker coming. We're going to have a pretty in-depth profile on her in tomorrow's newsletter on Friday, January 13th. And Justin Herlick of Pine, I'm excited to lead a fireside chat with him. You excited to, I guess, talk about the community?
So I think Dealmaker and Pine are going to, both those vendors are going to be interesting conversations, because Pine serves the Canadian housing market, which is going through lower transaction volume, and Dealmaker, I think, is an alternative way for companies to raise capital, and they seem to be still going strong. So I'd love to hear about their growth in the future. I think also we have an event, Tech Together, in Montreal at the end of the month, which I'm super excited for. Mark, a founder of Unido, is going to be doing a fireside, and we're going to have a panel with some health tech founders talking about the future of health. So I think we've got a strong start to the year with our in real life events, which I'm hoping, and I'm going to be at both of those. I'm hoping to meet lots of people.
Yeah, and so that one goes on January 31st in Montreal. All of the info's on our website, TechTO.org. And then February 6th, we have another one on February 6th. So just as Alex said, lots of exciting in real life events coming up. Alex, thank you as always for your time and for sharing the insights with the rest of our community. If you enjoyed this episode, please like and subscribe wherever you are watching or listening. And we will actually be returning on a bi-weekly basis. So our next episode will drop on Thursday, January 26th. Till then, you can catch up on all previous episodes, including today's, on our Spotify. So don't forget to like and subscribe. Thanks for listening.
We're in the business of delivering impossible things. We're in the business of delivering things that nobody's ever seen before.
If you build that culture, you'll come up with really cool and innovative stuff, and literally could be in the next multi-billion-dollar idea.
So this conversation is largely going to be about scaling yourself and scaling your leadership team.
I want to talk about one of the biggest struggles that I think a lot of startups face early on, which is building initial traction.